Hey YouTube, I'm Jimmy. In this video, I'm going to walk through my analysis of Merck, ticker symbol MRK. This is the 19th video in our series where we're analyzing all 30 stocks in the Dow Jones Industrial Average. You can see a link to all those other videos in the description below. But once we're done with our analysis, we're going to take all of that analysis and we're going to try to build three different portfolios: a dividend, a value, and a growth portfolio. So Merck is the global healthcare company that has prescription medicines, vaccines, biologic therapies, and animal healthcare products. We're going to break out their business into four main segments. We're going to have human health, vaccines, animal health, and then alliances. This chart breaks out each of their segments by its contribution to revenue. And as we can see, human health is by far the largest segment, and that accounts for about 73% of revenue. Vaccines is the second largest with a bit over 15%. Animal health is the third, right around 10%. And then alliances is right around 2%. Now, the alliance segment is the smallest, and that consists of collaborations with other companies. One example of this is back in March of 2018, Merck teamed up with a company that created some tyrosine kinase inhibitors, and it's supposed to be a really big deal, and the potential is something that could really help the medical industry. Ultimately, if that collaboration ends up generating revenue, this is where it'll fall. Then we have animal health. This segment discovers, develops, manufactures, and then sells products like vaccines and other animal health-like products. They sell them to veterinarians, distributors, and animal breeders. Now, the company says that there are many synergies between the animal health segment and the human health segment, and specifically when it comes to research and development. And if we think about it, that makes a lot of sense, since I would imagine I could see how those two research areas could overlap. Now, this is also an important point from an investing, if we're going to value the company from an investment standpoint, because one of the techniques you can use to value a company is called sum of the parts, where in theory, what you do is you say, oh, what is each segment worth if we spun it off and made it its own business? That wouldn't really work in this scenario, now that we know that there's so many synergies between those two, because without animal health and human health sort of collaborating and sharing each other's information and research with each other, then it's likely to slow down both companies. So that would make that type of analysis a bit weaker. Okay, then there's the vaccine segment. This segment is exactly what you might think. They make vaccines, and they've actually been a pretty good source of growth for Merck recently, but we'll get more to that in a minute. Then we have the largest segment, that is human health. We can also probably call this pharmaceutical drugs, since that's primarily what they do. In fact, in the business section of their 10K, that's where I always start whenever I'm tackling a new company. Well, they have their reportable segment as pharmaceuticals, and they include human health and vaccines in there. Now, for me, I separated those two out instead of combining them because I figured it would give us a better understanding of what potential growth drivers we have. Okay, so now let's look at revenue. So as we could see, revenue declined a bit from 2011 over to 2015, and then had a few small upticks in 2016 and 2017. Now, analyst estimates, they're the green bars. Well, analysts are expecting for revenue to approach the highs of 2011. They expect that to happen in the next few years. Now, 2018, the estimates for 2018, that's mostly just the fourth quarter, since the first three quarters are already in, and Merck has already put up a bit over $31 billion in revenue through the first three quarters. So to get to the level of estimates here, Merck only needs to put up about $11 billion more in the fourth quarter, which is possible, especially since fourth quarter has been a rather strong quarter for them in recent years. So now if we look a bit closer at each of the segments, one thing that we can see is human health. When we add that to the chart, we can see that that's consistently been a large driver of overall revenue. And we'll look closer at this segment in a few minutes. Now, I don't have any projections for any of the segments. In order to come up with that, we'd have to build essentially a full model to try to value Merck and try to project what business would look like. That would take a ton of time. If you're interested in seeing something like that, let me know in the comments below, because that might make for an interesting video. I could probably use an old one that I've done and just update it with new numbers and then walk everybody through how I would build something like that. Either way, it seems that human health has been about flat recently. Now, when we add vaccines, we can see that vaccines has climbed nicely in recent years. Now, just so we're all on the same page, notice that I added a right-hand axis to this whole chart. I did that so we could see the individual lines a bit more clearly. If we kept them on the same axis, the chart would look like this, and it's really tough to tell whether or not there's anything interesting happening there. So for all the different segments going forward, I'm going to use the right-hand axis So don't compare those to the first two lines in the chart. Just we're looking more at the trend. And if we remember, vaccines is the second largest segment. They get about 15% of overall revenue. So we can sort of compare them to each other, the three that we're about to add. Now, if we add animal health, we can see, once again, it seems to be growing quite nicely. Then if we add the smallest segment, alliances, we can see that it's a bit volatile, but it only accounts for about 2% of revenue, so I'm not too concerned about what this segment is doing. Now, jumping back to human health for a minute, because obviously this is one of the key drivers to revenue. So here's a chart for their leading revenue-generating prescription drugs going back to 2010. And as we can see, Januvia is their largest contributor to revenue. Januvia is a diabetes medicine, and it's actually Januvia and Genumet. Genumet is actually a combination of Januvia and something called metformin. So overall, these products have been the primary driver of revenue in recent years. So we can see that Keytruda came to market in 2014, and it's been growing rapidly ever since. In fact, if we add in those projections for these drugs, we could see that they expect Keytruda to be one of the primary drivers of revenue in the next few years. Keytruda is a cancer drug. It's supposed to be quite a promising drug when it comes to treating lung cancer and a few other cancer types. And so that would be awesome if they could, figure that thing out. Okay, so what do we think Merck stock is actually worth? And should we add it to any of the portfolios? Now, I think it's important to remember with pharmaceutical companies that getting drugs approved is a complex and lengthy process, and often it doesn't go as management or as analysts predict it will. And 2019 is expected to be a pretty big year for Merck, as they have many big developments in the pipeline. This is a table from their most recent earnings presentation, and as you can see, they have many different things that they're waiting for in 2019 and some even in 2020. Now, this is important because any good or bad news on any of these big developments is likely to really make the stock move in one direction or another. So I think it's something to consider that we might have to be ready for additional volatility. Although the good news is that this type of company tends to be fairly defensive, and if the market continues to struggle, it's likely that Merck and its competitors would do decent since it's often a defensive play. And ultimately, if the country went into a recession, Merck is likely to be not terribly affected by that, since medicine tends to be fairly defensive. Okay, so now let's try to value Merck stock. Now, PE is tricky to use here because of the nature of Merck's business. So much of their revenue is often driven in this type of business by a single drug, or maybe two, or maybe three. It's not as simple as selling something like Cokes or something like that. If Keytruda continues to pick up steam, then perhaps Merck should be trading at a premium compared to its peers. But if bad news comes out and the clinical trial doesn't go as they expect, well then Merck might have to be trading at a discount to its peers. So I think it makes more sense for us to try to use discounted cash flow. So when we take analyst estimates for free cash flow and we go out the next few years, we can see that we get a fair value of about $82 per share. Now, the first thing that to me that's interesting is that this big jump in free cash flow here. When I actually saw this, I started questioning analyst projections and I started doing some digging on my own to see if this was realistic. And what I found is that through the first 3 quarters of 2018, Merck has already posted up almost $6 billion in free cash flow, which makes their $9.8 billion much more obtainable. Next, we use a weighted average cost of capital of about 8.5%. And that may seem a bit high given the stability of Merck's business, at least over the long term, but Merck actually has very little debt. They get about $33 billion in long-term debt compared to a market cap of near $190 billion. It turns out that the valuation we're using is mostly based on the cost of equity, and the cost of equity is higher. Then we have a perpetual growth rate of about 2.5%. That's been standard for us. That's what we typically use. That seems like a reasonable number to use. Now, Merck also has a pretty good dividend with a dividend yield of about 3%. In October of 2018, Merck's board of directors approved a 15% increase in their quarterly dividend. That's up. They've consistently increased it by about 2 or 3% every year. Then they 15% jump just recently. They moved it up to 55 cents from 48 cents. They also entered an accelerated repurchase program for $5 billion. Repurchases is the same as a stock buyback. So right now, Merck is trading at about $72 per share. Our fair value has them up there at about $82 per share. So that's an upside of about 14%. So it's a decent one. If Merck stock keeps falling, it could even become more appealing from a value perspective. So I don't really see them. I don't see Merck as a fit in our growth portfolio, perhaps in the value portfolio, especially if it keeps falling. The dividend portfolio probably makes some sense. 3% is pretty good, could be a good diversifier in that portfolio. But what do you think? Do you think we should add it to any of the portfolios? Is it strong enough to be in our dividend portfolio at 3%? I'm not sure how high we're going to target when we go ahead and build that portfolio. That being said, thanks for sticking with me all the way to the end of the video. If you haven't done so already, hit the subscribe button. Let me know any thoughts or questions or ideas you have in the comments below. And thanks a lot, and I'll see you in the next video.